New week opening gaps is a really strong confluence, and as you see in my charts, I have them pretty much everywhere and I use them in every trading session when price action comes around these levels. The way that you set it up is I use this horizontal ray tool here, and on the Friday close at 4:59, you will take the close of the Friday price at 4:59 and you will mark out the opening price on Sunday at 6 p.m. And this will constitute a gap that will act in many different ways with price action. And I'll go through the many different ways that it affects the way that we trade. The first thing that you need to know is that these levels will hold validity for 60 days or 8 weeks. So you should pretty much have the new week opening gap of the current week and then 7 other previous week opening gaps. Anything before that is invalid. And this is as per ICT's teachings. The other thing that's important is if there are multiple opening gaps that are close to each other, let's say we would have one here and then the following week we'd have one that's really, really close. When price action is in between these opening gaps, you can expect price to consolidate and be very, very choppy. So very low probability trading conditions. If a new week opening gap is very tiny, which means that it's under 2 points or 1 point in CFDs or 4 ticks to 8 ticks in futures, you should refer to the previous week opening gap for that week. So it should hold no validity. The way that I use these gaps is as follows. I use them as an extra confluence in my charts to show me if price is going to want to either go to them, kind of like a gravitational field. Think of it as gravity, with price action being in the orbit of gravity. So it attracts price action, but then when it reaches the opening gaps, you can expect the price to either consolidate in that area. This is what we're seeing here. Or you could see price wanting to bounce off from it and go from one gap to the other. And this is how price action moves. We're on a 15-minute chart right here. Oops. And I want to show you the precision of these levels. So right now, this is the opening gap of December 29. This has never really been tested up until now, today. So look, price action today, very, very choppy. Trying to bounce off of it, gravitational field, bringing it back into the chop zone, into the opening gap. This is where we're at now. Look at this. Very, very choppy around this gap. Did it want to go down? It attempted, but it started wicking, got chopped in here. Very low probability conditions when you're around this area. Trying to push away, came right back down into this opening gap. So right here, it's acting like gravity. And then when we actually see a push off of it, we see a raid. This was a setup that was very, very powerful. We got our confluences. We have the raid, break of structure. We have displacement, and then it's displacing off of this gap. And where is it going? It's going from this one to this one. And in the meantime, it's also grabbing the liquidity from here. And yeah, that's pretty much it. So along the way, if you're trading this is your first target, or it could be 50 fib depending on the lower time frame what this looks like. But if you're taking an entry around this area, you could take a 50 fib partial, another partial here, and then another target here at the opening gap, and see how it bounces right off of it. So these levels, they are almost like extra blue lines. So when you're looking at your liquidity to be taken, you're looking at the blue lines that haven't been tapped in, while the gaps act kind of the same way. So they are a target for price action. I want to show you a few more examples. We rolled over in futures, so that's why I don't have a ton of them. But you can see as far as I can go in these charts, new week opening gap, market opens, bounces, explodes. Then we have this is the futures rollover, so I don't have any more information on this side of the curve. But then once we come back down, boom, hits it, can't displace down. So in these situations, you wait for price action to give you a bullish signal above this gap. Once it does that, then you can take a trade long. Here again, bounces right off of the opening gap. This is the gap that I talked about earlier. We're in this one right now today, and this one is from, January 1st. The gaps can be viewed in several ways. They are, number one, a confluence to either go long above them or short under them, to sit on your hands when you're in them, or a sandwich between two of them. And lastly, they act as a gravitational field for price action to gravitate back towards the opening gaps. So there's nothing really magical about this. It's a very important key level. It acts as a confluence. You should have them in your charts and you should use them. Sometimes when you're feeling iffy about going in on a particular trade, just look at the new week opening gap or the previous week opening gap and say, I'm bullish. Is this pushing above it? Well, you have a better chance that if you're under that gap and the price action wants to go higher. So you may not have a good rally in those instances. So extra confluence for you. In terms of new day opening gap, those hold validity for about 3 days as per ICT. I don't use them a lot. I'll use a new day opening gap only when the gap is like really significant. So I don't even look for them. It's just that if I see that in the charts, there's a huge gap, I'm like, oh, this is the new day opening gap. And essentially I use them for that particular day. ICT says that they're valid for 3 days max, but I think I've used a new day opening gap confluence maybe like 3 or 4 times in the last 3 years. So not something that you see occur a lot. Hopefully this helped you. This was a long requested demand to talk about these levels. They're really, really easy to understand. Leave your comments in the section below. If you have anything else to add to this, please use the discussion room or post your comment below so that it could benefit our entire community of members. Guys, make sure you go see this socials tab. We have our YouTube channel, the Twitter, and then we have a Telegram channel that has been newly added. You will find some great value from the free Telegram channel. And we also have our private trading group tab over here, as well as the expert advisor Discord if you want to automate the Nexus Blast strategy.